Okay, so picking up where we left off, I asked you how would we close this balance, this debit balance? Well, to close something, you do the opposite. So we would need to credit factory overhead for the 150 because we want the balance to be zero. And since this is an immaterial number, and I'm just going to assume that I've already sold that, so I'm actually going to, and in this chapter we will always do this, debit cost of goods sold. For the 150. And because I have allocated less than what I actually have, I've under allocated. I haven't allocated enough. It's immaterial. I don't know which job it went to. I'm going to assume that it already got sold, so I'm just going to expense it in the current period by doing this. If my numbers were way off, and this was a big number here, then I would probably go back in and I would figure out what is causing it to be off by so much. Is my rate, is that $5 number, is that off? Or is my estimated versus actual too far off? And I would make adjustments accordingly. But for this class, you will close factory overhead, the cost of goods sold. On December 15th, Legend Guitars has completed job 71, which consists of 20 guitars. Determine the balance on the job call sheet for job 71 and journalize the completion of job 71. So we're going to look and see how much job 71 cost us. Well, when we started, we had a balance of $3,000. Now let's see how much direct material we put into job 70. So if you go back and look, even though I've filled that out already, 2,000 materials were for job 71. So that's where the 2,000 came from. And my font got changed, but it's okay. Direct labor. All right, we can go back and find direct labor for job 71. So here you can see that your direct labor for job 71, hold on, that's not the right thing. Okay, so direct labor for job 71 was 350 hours times 10, so 3,500. So that is where that 3,500 came from, and you would have to do this. Factory overhead, the factory overhead we assigned to job 71, we will look and see that the job 71 had 350 hours right here at an overhead rate of $5. So $1,750 was assigned to our factory overhead. So that's where that number would come from. So when we add up the beginning balance plus the direct materials plus the direct labor and your factory overhead, the total job was $10,250. Now it was all in work in process because remember I dumped this into work in process. I put this to WIP and all of this into WIP. So all these are in WIP, but they're finished. So let's take them out of work in process and put them into finished goods. So for this journal entry, make finished goods inventory go up by 2,250 and make WIP inventory go down by that amount. It's no longer work in process. We're finished with it. Okay, on December 31st, Legend Guitars sold on account 40 guitars for $8.50 each. Journalize the sale. Legend Guitars uses the perpetual method of inventory and the FIFO inventory method. So on December 31st, we're going to sell the guitars, and we're going to look at that. We sold 40 guitars at $8.50 each on account. So we're going to have an accounts receivable because those people have promised to pay. So we're going to record an accounts receivable. And we sold 40 guitars for $8.50 each. So that would be $34,000. So this tells us we're going to receive $34,000 from our customers later, and this is a sale, which is a revenue. So we're going to credit our revenue account sales. That's the sale, recording the sale. But we need to take care of our finished goods because we have sold those, so they're no longer sitting in finished goods. So we're going to be doing the FIFO, which if you remember, we're going to sell the oldest one first in, first out. So the oldest one's going to go first. So if I look at my inventory list, I see that I had 40 from a previous amount, and those 40 cost $500 each. So when I go to sell these, I'm going to take these out of my inventory and put them in the cost of goods sold so that they can match that expense in the same period. So it would be 40, your 40, and I'm going to pause this and delete this so we can actually work it. Well, I'll leave it there. But we're going to sell 40 of those at $500. And they cost us $500. So 40 times 500 would be $20,000. So I would do cost of goods sold for $20,000. That's not how much I sold it for, but how much it cost, and it's sitting in inventory. And then I need to take it out of finished goods inventory for $20,000. Okay, so let's look at this inventory list to make sure we understand. We had some manufactured from a previous period that only cost us $500. Now we just sold all 40 of those for $20,000. We sold them for more than that amount. That's how much we originally paid for them, or how much it cost us to make those. And then now we just finished a manufacturing job 71. So the next ones we sell are at original cost will be a little bit higher. They'll be $512.50 each. Okay, so this is our journal entry, and these are the journal entries that you will be doing in chapter 19. Let me know if you have any questions.